Thanks for the call. Appreciate the call.
Okay.
We have another caller on the line. Before we get to him, call us 212-209-2877. Keeping score 212-209-2877. Caller, you're on live with Keeping Score. What's your name and where are you calling from?
Hi, yeah, my name is Michael. I'm from Brooklyn. Thanks for taking my call.
No problem. What's your question?
I have a 401k from a nonprofit that I worked for a while, for a little less than 10 years. And I've been out of work for a couple of years, and hopefully about to start full-time work using the same company 401k, and I just assume that it just sort of sits there, and I can re-up it when I get the full-time job again. Is that the case, or do they roll it into something without maybe they send me a letter in the mail, maybe I don't know about it? I guess I have to call and find out what actually the status of it is. But do you know what I can sort of,
Yes.
what
Yes.
I'm in for here?
Yes, a good question. The first thing you want to do or don't want to do is assume anything, especially when it pertains to money. So your 401k, you mentioned a nonprofit, it's probably 403B. It doesn't matter. It's 401k or 403B. When you left the company, they froze your account, meaning that you can't add anything to that investment. And the investments that you already had in place are still there. So it's either going up or down, and you don't know which way it's going. So you're sort of in the dark, but it still exists. The custodian who manages the money is obligated to send you a statement and keep you informed as to what the balance is in that account. So as long as the investments didn't go to zero, and we doubt that happened because you mentioned the last 10 years that wouldn't have happened, that money is there. And when you resume work, as long as they have the same plan, they may have a new retirement plan. But when you resume work, if they have the same plan, you may contribute. If they have a new plan, you would have to roll your old money into the new plan and then contribute. But you can only contribute while you're working because you have to contribute from earned income. But definitely figure out where it is. What we always recommend when most times when people leave a company is to roll it into an IRA. And the reason for that is that you can contribute to it and you have more control as to what's going on. All right, but the key is that you say it again.
Can I bring that from an IRA out again to something that it's employee kind of contributing to just the same? Like, does the IRA have to be for a certain amount of time? I guess is my question.
No, with the IRA, you can't go into a retirement plan at work. It's just one way. It comes out to the IRA. If I understand your question. In terms of time with an IRA, you can have it for the rest of your life. It's just that when you reach a certain age, you have to begin to take distribution. And that age is 70 and a half. So there's no time thing. I'm sorry. Go ahead.
Sorry. Let me. I appreciate. I'm going to try and listen to the record back, but it's weird that this is on WBAI because it's also, I know the caller ahead of me. It's basically he wants to become a landlord, right?
Right.
And I'm sort of like hoping that whatever I put in, $20,000, whatever it is, that the market doesn't go, through the floor, and we're all kind of tied up into this system, which is a damn shame. But it sort of implicates everybody and makes you have to look at it in a sort of, atomize, the individual bearer of commodity to the market, that kind of thing. And these sorts of, what would you say, capitalist survival guides is a service of a kind, but it's creating the same kind of, machinery of exploitation. I hope that guy, maybe he'll be a good landlord. As individuals, they can be anything. But in terms of the social relation, it's, it's given us, the world's on fire. Anyway, thank you very much.
You got to understand what you're saying, but the key is regardless of how you feel, and I hear what you're saying, but you have to take care of yourself and your family. So what you want to do is arm yourself with as much information
Right.
And you bring your good spirit to capitalism, as opposed to saying you bring that good energy and do the right thing. But you have to protect your money so that you can wage the war. Take care of your family.
Yeah, it's true. To get to the barricade, you have to, you have to actually buy a barricade. I suppose. No, we'll get it from the street, and I'll see you guys there. Thank you.
All right.
Thank you.
Thanks for the call.
Yes,
we're on with Injil Muhammad. We have one more caller. I just before we get to the call, I just wanted to say, we started this conversation off, dealing with athletes and the money they make, but obviously, as we see from the callers, that there's basic principles.
Absolutely.
Listen,
we all in it together.
Right.
We all in it together. We all have the same problem. Their problems are just more magnified because they're dealing with more capital.
Right.
But fundamentally, it's the same issue.
All right. We have one more caller. Caller, you're on live with Keeping Score. What's your name and where are you calling from?
My name is Derek. I'm calling from Brooklyn. I love this conversation. I have a similar problem, issue, not a problem. I'm a landlord myself, and I'm thinking of renting out my duplex. But the idea of putting in an LLC makes perfectly good sense. But I'm up in age now, and I have to realize I'm thinking of putting in an irrevocable trust. So if I put it in the property in an LLC, I know this protects me from any liability, but I also wanted to have an irrevocable trust as the elder plan. What are your thoughts about that? Because I don't know which one I should do first. Your comment.
Okay, well, it's probably going to be beyond this conversation. But my question is this: what is your goal? You're trying to put in a trust to protect. Okay. What are you trying to accomplish?
Okay, I'm glad you asked that question. So the goal is to generate the property produces quite a bit of income. Okay. And my goal is to move out of here and enjoy the benefits of being retired and enjoying the full benefits of the income from the property. Likewise, I realize that in doing so, I have to protect it. And if it's in my name, then if something happens while we're not here, I realize we could be sued. And if I put it in an LLC, then that's a separate entity, its own legal entity, and people have to sue me. They're going to have to go after the LLC, not me.
That's true. Yes, sir.
But my point is, sir, is that I said, gee whiz, but I don't have a trust to put. Mm-hmm. I said, well, how does that work? Because I said that was my.
No, I understand. So in other words, you're planning to retire and you want to keep the building operating. Who would operate the building when you retire? You have children come behind you, or?
I have a trusted management agent who would not. We would operate it jointly.
Okay.
And my goal, and I love what you said before, which was the whole purpose of having money is to make more money, not to.
Absolutely. Yes, sir.
Not just to blow out the window, and that's the thing I'm trying to prevent. So my goal is to do that. So if I have a property manager, she would manage the property, she would get a certain percentage from it. But the main thing is to protect that asset at all costs.
Right.
And the other thing is the irrevocable trust. Now, I don't understand, I know you're not an attorney, how that would possibly work, because I have to think about the tax ramifications from doing both of those two things. So they both come with a plus and minuses, and I understand
they
one.
Do. Well, let's kind of go over it quickly because I know time is moving on. We're clear on the LLC. I'm sorry. Go ahead. One more question. I'm sorry.
No. Go ahead. What's your point? I'm sorry. I'm listening.
Because of time. The LLC, you clearly understand that. You put the property in LLC. It protects you from a lawsuit. Doesn't eliminate someone from suing you personally, but it does protect you. And the income is reported to you personally on your return, depending on what corporate entity you set up, be it a partnership or be it an S corp. We definitely don't want property in a C corp. That's a no-no. You never want to do that. Okay. All right. So that's clear.
Small corp.
I'm sorry.
A small corporation.
You can put an S corp works. S corp works for. See, when you form an LLC, that's the legal entity. But then you have to choose how you're going to be taxed.
Oh.
Okay. You follow me? So the LLC is the legal entity. But then you're going to say, am I going to be taxed as a partnership? Is this going to be taxed to my personal return like a Schedule E? Or am I going to have an S corp? You definitely don't want a C corp. I don't want to go deep into that now, but the reason is because you pay taxes twice when you sell the property.
Right.
When you put money, when you put property in irrevocable trust, what that means is that you no longer own the property. That property is in the trust. All right, and you may or may not want to do that because when you sell the property, there's an opportunity for you to do what is called a 1031 exchange. A 1031 exchange puts you in a situation where the gain on that property is not taxed until something else happens down the line. If you put the property in irrevocable trust, you're gonna prevent yourself from being able to do that, and you don't have control of the property. The trust does, and you have a trustee. So you may be able to accomplish what you're trying to do by having an LLC and a strong agreement with your management company. Okay, so that's why I asked you what the goal is. But what I recommend that we talk offline because it's probably go a little deeper than the time that we have.
No, we have to talk offline because I have to. There's other particulars I can't discuss on the air, but that I'm going to be involved in, and I want to make sure that I'm a big proponent of financial literacy. I believe in it, and as you said, you open up your conversation. This is.
Yes, sir.
This is something that's not taught in school, but you learn it from the school of hard knocks.
The school, and this is what we have to do. We have to bring it out, and we have to formulate a way to communicate it. The way I've been doing it is speaking to family, friends, clients. I mean, I have young nephews who recently came out of college, and we meet quarterly, and I have a layout for them, what they're supposed to be doing between the time they're 22 to the time they're 80. What should they be doing at each stage of their lives as young men? You know, so financial literacy is something we must push out there. You know, so I appreciate the call, and hopefully we'll speak offline.
Okay. Before you go, can I have your number, by the way, where I can reach you?
Absolutely. It's again, the area code is 212. The number is 684.
684.
36.
36.
37.
37. And your last name again, please?
Muhammad, like Muhammad Ali. Injil Muhammad.
Okay, thank you.
Yes, sir.
Thanks for the call. Mr. Muhammad, you're in high demand, and we try to give the people what they want. So I appreciate you being a guest today. Thanks a lot.
Well, we appreciate you giving us the opportunity to speak directly to the people. We appreciate that.
No problem at all. You're listening to WBAI 99.5 FM. Streaming live on WBAI.org. You can also archive Keeping Score or email keeping score at WBAI.org. So